Good morning, everyone. We're here with Hayden James. He is co-founder and CEO of Fraction. Welcome to our YouTube channel.
Thank you so much for having me.
Yeah, my pleasure. So wanted to get you on today just to talk a little bit about this new and exciting, I guess, mortgage product that we have available. TMG, our brokerage, is a preferred partner. So I wanted to give you this opportunity to talk about it because we are preferred partners and because it sounds awesome. So give me a little bit of an understanding as to who you are, what Fraction is, why you started this.
Yeah, absolutely. So I'm, again, a co-founder CEO at Fraction. My co-founder's name is Josh Baker. We started Fraction originally because we saw a lot of the problems that people were having with building up home equity, but then having to sell their homes in order to access it. And then the other problem of having investors buy properties and not being able to rent it out. And so what we really saw that there was a massive problem with liquidity and home equity, that it was causing problems in society, and we wanted to change that. And so what we originally did was I asked us, could someone sell shares in their home? We came to the conclusion that it was a really bad idea, that homeowners didn't want to sell shares in their home or give up control. Investors didn't want to actually have the downside risk of being invested in the home alongside the homeowner. And so we came up with a really innovative product that allows homeowners to access their home equity with no monthly payments, no restrictions on age or the use of proceeds, and enables the investor to have access, which is ourselves, to the property market.
So you've got four major sort of programs or client sort of profiles that fit underneath this product. Can you just tell me what they are?
Yeah, absolutely. So the one is our equity takeout product. And so we'll go up to 40% loan to value, and that enables a homeowner to take out that equity and use it to either fund maybe a down payment for their kids, put their kids through school, put into other investments, or purchase another property. The other one we have is a COVID-19 relief program. And so what this was really born out of the problem was that people were really financially impacted by COVID, and making their mortgage payments was really difficult. And so we enabled them to buy out their monthly mortgage, and so they don't no longer have to make monthly payments, and it gives them a chance to get back on their feet. And so things like that, we don't have any prepayment penalties, and we give them just a lot of flexibility. The other one is for self-employed individuals. So people who don't have income that they're declared, or maybe they have kind of weird financial or credit boxes. We enable them to access credit without the need to show income or that ability to repay other than the home. Mm-hmm. And then the other one is obviously the secondary property, which we kind of discussed here as well, which is the ability to buy a secondary home with the equity owning your existing home, and then also use the equity you're buying in the second home as well. So
how is it a reverse mortgage or not a reverse mortgage? Because that's the term that sort of comes to mind, or most people are thinking of, right? That old school reverse mortgage product.
Yeah, absolutely. So just like reverse mortgages, we don't have monthly payments, but that's really where the similarities stop. And so unlike reverse mortgages, we don't have restrictions on age or loan to value. So our loan value goes to 40% no matter your age. And the rate of the loan is based on the appreciation of the home. And so really what we're trying to do is preserve homeowners' equity in downside scenarios or where the home doesn't appreciate. And we do that by essentially adjusting the amount that you're charged based on the home's appreciation.
What I liked when I was reading through the details was the fact that because it's not like a reverse mortgage, again, there is no age component to qualifying, but you could also have a beneficiary on title, because quite often we find that where children or even grandchildren are placed on title of the home for estate planning purposes, but then you can't access a reverse mortgage.
Yeah, there's a lot of great reasons to do that, obviously, right, from a financial planning standpoint. And we wanted to make sure that these homeowners who are making good financial decisions for their families still have access to the credit they need and access to the liquidity that they need. And a lot of times it's for their family. Yeah. And so we've given them access and not put those restrictions in place just for that reason.
Yeah, which is awesome. So who is it not for? Like, who is it? No, this is not your product.
Yeah, absolutely. So if you've just purchased a property and you don't have a ton of equity built up in your home, you don't own more than 60% of your home, unfortunately, you're just not going to qualify for Fraction. We only work up to 40% loan to value. So let's say $400K on $1 million home. Mm-hmm. The other one is for leasehold properties or rural properties and hobby farms. Other than that, we work in major metropolitan areas within British Columbia and Ontario. So you can think outside of Lower Mainland, places like Victoria, Nanaimo, Kelowna, Kamloops, the areas where we have comparables that we can fairly judge the value of a home.
And another piece too that I've noticed, because this is important, when a lot of people look at equity lending programs, sometimes it's because they have bad credit. You do have a minimum credit requirement for Fraction.
Yeah, we have a minimum credit requirement of 650, but we do look at that on a case-by-case basis. So really what we're looking at is for things like cases of fraud or major misuse of credit. For instance, one thing that can really impact a credit score is credit utilization. So what that means is if you have, let's say, $30,000 available to you in credit, if you're using 28,000 of that, it's going to actually really significantly impact your credit. Where with Fraction, if you use the proceeds to pay down that credit, you can actually very quickly improve your credit score. And those are situations we'll look at from a homeowner standpoint to help them with that.
So another big one that you mentioned earlier that people probably didn't pick up on, but I did, is that there's no prepayment penalty. So you borrow and you can prepay the whole amount if you want.
Yeah, so one of the big things for us at Fraction is what we call socially conscious finance. And so what that really means is that we're trying to create socially conscious products that have mutually beneficial outcomes. And that's just not the values that we hang on the wall, but actually how our products are created. And one of the things that we didn't think was fair for homeowners was prepayment penalties. So if we're giving them the flexibility to access their home equity, do what they need to do in a smart financial way, we also shouldn't be restricting them from having that flexibility in the future, which is why we don't have prepayment penalties.
Awesome. Awesome. Now, next question clients always ask about, okay, what is the product? Do I qualify? What does it cost?
Yeah, absolutely.
Setup fees or those kinds of things.
Yeah, so we have a minimum rate, which is included at the time. So that's based on the home, based on the kind of the risk profile of that borrower. It's typically very comparable to like a HELOC product, and you can talk to your mortgage broker yourself to see which product's best for you and what makes sense. But then we do have an origination fee as well that we charge. So that's 2.5%. That's rolled into the cost of the loan. And that's all based into the APR, which you can talk to your mortgage broker about and just see what fits best for you. But from the homeowner standpoint, there's no actual fees you pay out of pocket other than an inspection and an appraisal.
So 2.5%, and that's on the amount that you're borrowing.
Correct. Yeah. So on a $100,000 loan, let's say, you're going to pay a $2,500 fee up front, plus the minimum interest rate that we charge or the appreciation over the term.
And then your standard legal fees. And as you mentioned, your inspection and appraisal.
Yeah, inspection, appraisal, and legal. It typically comes out to just over $1,000 all in. And that's what we're kind of looking at right now.
Anything else we need to know about the product today?
I think the biggest thing is speak to a mortgage broker like yourself if you're looking to access your home equity and a financial planner to see what's best for you. They're going to give you the best available options and tell you if Fraction's a fit. I think, from my personal perspective, the reasons to go with Fraction are, one is that we want to have mutual alignment with the homeowner. That's really what we're doing. We provide a really seamless process for origination. So right from origination to funding and try to make that as seamless for you as a homeowner, because we understand it's a very difficult time sometimes, or a very high stakes time, and one of the bigger decisions you can make. And we want to be a partner there for you. Awesome.
So how do clients access the product? How do they apply?
Yeah, so the best way to do is go speak to a mortgage broker like yourself. That's because they can help you with the information. They can make sure that we're the right product for you to start with. And if we're not, they're going to put you into a product that makes the most sense. You can also find out more information if you're curious about at our website. So that's fraction.is. It'll give you that information. And then you can take that to someone like yourself and just find out some more. That's what I would recommend.
Awesome. Well, thanks again for taking the time. I'm really excited to get someone into this new product if it is the right fit for them. So if anyone out there is listening and they are interested, please do reach out. Would love to have your inquiries on it, for you to be my first guinea pig on this new product. So thanks again for taking the time and for creating a product that fits a new niche that we have a need for. Appreciate it.
No, really appreciate your time too. Thank you.
Yeah, thanks.